Hey everyone, I'm so sorry for this more raw version of the monthly market update. I'm currently away for a few days of rest, but I didn't want to leave you waiting for this important report on the Greater Vancouver housing market. So let's get into it. Last month, we discussed the beginnings of a slowdown, and that theme's continuing in this month. For the first time since 2010, the lowest nationally available 5-year fixed rate mortgage is now north of 4%. This means that any buyer opting to purchase using a 5-year fixed mortgage, the rate will be stress tested at a minimum of 6.25%. So add to that record home prices and wage growth that has failed to keep pace with the rising cost of living, and you can see that something's got to give. The highly levered Vancouver housing market is going to struggle with mortgage rates north of 4%. Do I need to remind you that in 2018, when mortgage rates were hovering around 3.5%, Greater Vancouver home sales slumped to an 18-year low. Should be no surprise that sales activity has fallen off since February, and in April, the home sales were down 34% year over year. Prices need to adjust for the higher cost of borrowing. There's now signs this process is underway, which I'll discuss later in this report. But while we're discussing the cost of money, let's turn our attention, as we regularly do, to the Bank of Canada, largely responsible for creating this most recent housing boom. Remember, they lowered rates to zero and put $5 billion a week of quantitative easing, money printing, and told Canadians to borrow because rates would stay at zero until the end of 2023. That's what they said. And then they said housing activity was just a bit of pent-up demand. Meanwhile, residential credit growth went way up, growing at its fastest pace in 14 years. Oops. Yeah, those guys made a big mistake, and they're now trying to make it right. Turns out that rates aren't staying at zero until the end of 2023. In fact, they're going up aggressively. The bank raised rates 50 basis points in April, and that's the single largest rate hike in over 2 decades. Meanwhile, they all but guaranteed another 50 basis point hike in June. So just the other day, they noted we need higher rates to moderate demand, including demand in the housing market. Housing price growth is unsustainably strong in Canada. In other words, they're a year too late and now tightening into a significant slowdown, and so they're about to make another mistake, this time on the tightening side. It's particularly important because over the past 6 months, 54% of all new mortgage originations in Canada are variable rate mortgages. That's way up from the decade average of 25%. Basically, buyers have been funneling into the variable rate mortgages and thinking that rates would stay low for a long time. This is about to change, as variable rate mortgages will move up to 3% once the bank raises rates again in June. We basically have central bankers telling us they want to push asset prices lower in order to quell inflation. Some of them have called their desired policy effect a reverse wealth effect. So take that as you will, but I don't think it makes sense to fight them. Just like it didn't make sense to fight them when they said they were going to pump the system full of money 2 years ago. So what's ironic here is that many of the big bank forecasts, they're calling for a ton of rate hikes, but they assume house prices will stay flat. That's already falling short. It's just not working out as a theory. House prices are sliding, albeit it's mostly in the suburbs right now. It's pretty clear that detached and townhome prices, they peaked in February in the suburbs. Bidding wars at that time were insane, and buyers were grossly overpaying. There's now plenty of examples of identical homes selling for 10 to 15% lower today than they did in February. I'm hearing from lawyers that buyers are trying to back out of contracts, thinking they can simply walk away from their deposit. So unless you want to get sued for damages, this is a terrible idea. One buyer walking away from a deal can blow up 2 or 3 other deals connected to it. Anyways, smart realtors, we're now coaching our clients on this changing market conditions. Pricing for bidding wars is now a risky strategy. What's also important to note is that the price declines won't show up in the widely reported MLS benchmark price index. This index is a lagging indicator, and it likely won't show up in the year-over-year price declines until 2023. So we can see the price declines already showing up in the median sales price, though, and that tends to be a bit more of a volatile number. Anyways, price declines in the suburbs should not be surprising considering the values there nearly doubled in 3 years, and the pandemic is essentially over. Mortgage rates, they've more than doubled recently. And so while the suburbs are selling off, condos in the city of Vancouver are holding up quite well. There's likely a number of reasons for this. As the pandemic ends and the city comes roaring back to life, people are wanting to get closer to the action. Rents are also up. They're up in a big way, which has been attracting investors back into the market. So while much of the market is going through a correction, it's the inner city condos that have been holding up the best. There's currently just 2.6 months of supply available for condos in the city of Vancouver. That's indicative of a seller's market. So if we look at the average price per square foot, prices ripped from December to February and have now started to flatten. The average price per square foot currently sits at $1,151. And if the rest of the market continues to sell off, I don't think that the Vancouver condos will be immune forever. However, there's a pretty strong argument to be made that price corrections, if any, will be much more muted. Price growth has been relatively tepid in this segment over the past 5 years, and the city's not adding a lot of new supply. More than that, the new supply that is being added is averaging $1,500 a square foot, which makes the resale prices look like a bargain. So that's my update for you this month, looking at April 2022 in review. Today is May 11th, and I hope you are having a wonderful day, and I'll see you next week when I'm back in Vancouver. Bye for now.